Hi, my name is Bryce Bingham, and I'm a research analyst at Alarian. Thanks for tuning in to our Midstream Summer Recap. We'll start by looking at performance. Despite a recent decline, Midstream, as represented by the AMNA Index, a broad composite of North American energy infrastructure companies, is still the best performing sector of energy this year. Through the end of August, Midstream is up 13.8%, while the broader energy sector, as represented by the IXE Index, is down 0.4%. After reaching a relative peak of over $66 a barrel in April, WTI crude prices fell to $51 a barrel in early August, but have since rebounded slightly and are up 21.3% year-to-date. The long-term outlook for the space is constructive, as growing energy production and global demand will require additional energy infrastructure. Turning to earnings, 2Q results were a mixed bag. Several large MLPs, including Energy Transfer, Plains All American, and Magellan Midstream, reported strong 2Q EBITDA beats and raised full-year 2019 EBITDA or distributable cash flow guidance. On the downside, some MLPs made downward revisions to their full-year volume guidance or financial guidance after natural gas prices reached multi-year lows in July, causing producers to reevaluate their growth plans. It's important to note that the long-term outlook for natural gas production growth remains strong. Distributions have also continued to trend in the right direction. 2Q19 was a cut-free quarter for the AMZI Index, which is a composite of midstream MLPs. Average distribution coverage for the quarter was 1.4 times, demonstrating that MLPs are well positioned to afford their distributions even as yields remain elevated. M&A activity in the sector has continued, with Pembina recently announcing that it would be acquiring Kinder Morgan Canada at a 38% premium, with the deal set to close later this year or in early 2020. Private equity has also continued its involvement in midstream. Tallgrass Energy recently received a take-private offer from its sponsor, Blackstone Infrastructure Partners, at a 36% premium. Private equity interest in the space, especially at favorable valuations, helps lend credibility to the midstream investment thesis. Midstream companies have made progress in cleaning up their balance sheets. Average leverage ratios for both MLP and midstream indices have fallen since 2016. After Phillips 66 Partners eliminated its IDRs in early August, 86% of the AMZI index by weighting has now eliminated IDRs, a significant improvement from only 38% in late 2016. As mentioned earlier, distribution coverage is moving in the right direction. Despite these improvements, index yield is significantly higher today than it was at the end of 2016. So what catalysts should investors look for as we approach the home stretch of 2019? Improvement in oil prices could benefit overall energy sentiment. Further private equity involvement, a shift to total return focus through share buybacks, new investors entering the space, and continued execution by midstream companies could all support improved prices through the remainder of the year. To recap, midstream has performed well year-to-date, especially when viewed in the context of broader energy performance. Distributions are trending in the right direction, private equity continues to invest in the space, and company-level improvements like leverage reductions and the elimination of IDRs highlight a cleaner and more investable industry. Growing energy production and global demand will continue to drive demand for U.S. energy infrastructure. Please note that our comments are covered by these disclaimers. Thanks again for watching.